Okay. 33 minutes after the hour, we're in the last segment, and I know you just heard Fred Dashevsky on that uscoincapital.com commercial, didn't you? That was, I don't know, is that coincidental, Fred, that you should be here all of a sudden after we hear your wonderful voice on there, stumping for people to do the right thing, folks?
And then I magically appear as you say my name 3 times, and I pop
There's
up.
Fred. All right. God love you. See, here's the thing. Fred is a numismatic gold dealer, right? He deals in gold and silver. He's got a degree in, you've studied everything as far as psychology, political science, economics, all those areas that matter to we the people out there. I know that a lot of us are having a hard time with what's going on overseas, but I do know that when you've got BRICS and you've got the devaluation of the dollar, you got the Fed that's doing what it's doing, and there will be no interest rate drop again for the rest of the year. That's what I heard. Is that true?
Well, the campus seems to be coming around to my side of this. I've been saying since January, when 90% of the economists were lined up saying there would be 3 rate drops and they would start in the spring. Well, we're halfway through the spring and we haven't even had the first one. And I still contend the likelihood of seeing rate drops before year end are very low. But more and more people seem to be coming around to my thinking here because the Fed is continually now looking at inflation. They've come up with a new word now. Now it's sticky. So that's the new phrase. So inflation is now sticky.
Yeah, well, speaking of sticky, Fred, there's a lot of people out there, home sales, because, this is the thing. We've got a little bit of a housing shortage, inventory, but the problem is with interest rates way up, I'm reading reports now that people are staying put. They're less inclined. I was reading, this is really funny, because a lot of people, rather than pay these movers, unless you're some corporate wig out there that can afford it, a lot of people, U-Haul is now suffering because people don't want to rent trucks. They don't want to move. Unless you're really seriously downsizing, U-Haul's going to get hurt. Now, when I read stuff like that, I have to put 2 and 2 together. People don't want to leave. That means that they're either going to, they're going to be doing more prepping. They're going to be spending more money, making home improvements, and not leaving and going somewhere else. Especially if they don't have a mortgage, but they got all this money tied up in the banks. I just got another article about 286 banks being at risk. What do you know about that?
Well, the first part of what you were talking about, I think a lot of that has to do with the fact that people did lock in 3% interest rates on mortgages. Now, who would want to give that up to buy another home? You look at the interest payments. It is really the more important variable than the price. You could look at $1 billion house. If the interest rates are 0.001%, you could pay that off over 30 years at minimal amounts. So it's never the cost of the house, it's the cost of the money. So when you've had a lot of people who did lock in early at these very, very low rates that the Fed had instituted, it's really difficult for them to think about perhaps now jumping to a 7.5% or 8% mortgage when you're carrying one at 3%. As far as the banks are concerned, there is a growing number of people that are getting concerned about regional banks. And these are the ones that, for the most part, are heavily tied to the commercial real estate market. And because the commercial real estate market around the country has not been performing well and property values there are dropping, it's creating an awful lot of pressure on the loans that have been made on these properties. So a lot of banks are facing potential defaults. And if the public is defaulting and the properties can't be revalued at higher levels than the original loans, the banks could face some serious problems. So a number of the quants, if you will, the guys who do this sort of math, are revisiting how many of the banks have exposure. How many of these loans do they have? Where are they situated? And if this goes awry, can they sustain the problem? And it does not look really particularly good. We remember last year there was a slew of quick bank failures. And if you really wanted to line up and start looking at this carefully, you could definitely create a very large list, again, of regional banks, exposure to commercial real estate that have potential problems.
So you remember Leslie Nielsen in that movie going, there's nothing going on back here, just go away. He's sitting there telling the media to go away while the building's burning up and bombs are going off or whatever.
Nothing to see here.
There's nothing to see here. Well, see, the thing is that people are starting to get a little bit concerned about the fact, gold right now, 2,300?
Yep. And it looks like we're holding that level on the back of the U.S. dollar climbing. Now, normally, and again, in my 40 years of experience, there's been an inverse relationship between the dollar and the price of gold. So as the price of gold climbs around against other currencies, gold should go down in price because gold is denominated in US dollars. What we've been seeing, however, is that even with a rising dollar against the rest of the world's currencies, the price of gold has sustained this level, and it seems to be holding up to this $2,300 mark. Yeah, and at the beginning of the year, I think we were around 2,000 or so, and I had expected to see at some point we would tap the $2,300 price for gold. We've actually seen it closer to 2,400 already a couple of times, but there seems to be huge support. And it has to do with the physical acquisition of gold that's going on around the world. Sovereign wealth funds, central banks, and investors are accumulating gold and silver also, which I think particularly is extremely undervalued because I've been looking at the ratio. It's the number of silver ounces it takes to buy an ounce of gold, which currently is about 87 to 1.
Wow.
Now, traditionally, in the modern era, it's averaged between 40 to 1 and 60 to 1. So it's way out of line, which means silver is really undervalued relative to the gold price.
So that would make it a good time to buy it, right?
Absolutely.
Oh, yeah. What about the premium?
Potential.
Yeah. What about the premium? Because I don't want to interrupt you here, but the thing is, what you just said, I mean, that's a huge difference, a huge ratio, 70-something to 1. And then not only that, or 80 to 1, but then
87 to 1 is where we are now. And traditionally, we've averaged in the modern era between 40 to 1 and 60 to 1. The peak was about 100 to 1. And that happened right after COVID, when all the quantitative easing nonsense started. That's when we saw that. So where we've pulled back to right now, I think it means that silver is relatively undervalued. And I think we should see a consistent increase in the price of silver this year. And demand on the industrial side has exploded from things that probably a lot of people didn't think about. Right now, the solar panel industry is becoming one of the largest accumulators of physical silver. They are burning through the amount of silver that they can acquire, and they need it for all these solar panels, which are becoming progressively more popular. As energy costs continue to climb, people look for alternatives, and solar is a viable one. I mean, they've got the technology down, but the demand coming from the solar industry is absolutely huge, and they expect to buy considerably more silver. So back, I remember in the 80s, we used to have as the largest buyer of silver in the industrial markets were coming from like Kodak and the photographic industry. And that shifted as they went digital. So the emulsification process ended and we didn't see as much demand. Well, over the years, we've begun to see shifts in the silver demand because of other things that silver can do. It has a wonderful conductivity. It has a wonderful reflectivity and sustainability. So silver is heavily used, and the more of these types of solar panel products that become popular, the more that industry is demanding silver. So I see huge industrial demand going forward that didn't exist before that I think is going to add to the growth in the price of silver going forward.
Right. But again, as I mentioned before, the last time we talked, you were talking about the premiums being very, very low now. Is that still
And they still are.
Oh,
Yep.
wow.
So here we are with silver coins, right? We can buy silver in the form of bars or bricks or, any physical form of silver that people acquire, which I am a fan of. Honestly, I think any form of silver has got to be better than paper money in the end. But I do find that the silver coins minted by the U.S. Treasury before 65 are really the best way to do that because of the fixed supply of them and the fact that their premiums are ridiculously low. In fact, the lowest they've been in the past 7 or 8 years. So it's effectively as if the price of silver was not $27.50. It's more like it was $24 an ounce for what we can offer to people now who want to buy silver in the form of the coins, because that price over just the metal they're made of has really compressed and it's very tight. Those will expand again. So if people are buying now, I think they're going to gain from 2 points. One, the upward price structure of silver itself. And secondly, that expansion again of the premiums as the demand continues to strip the limited availability of the pre-65 coins. This creates a great buying opportunity for silver investors.
No doubt, Fred. Eric in Kansas, do you have a question for Fred?
Yeah, not trying to brag, but I've bought the physical gold coins and the silver dollars. But I noticed, it might have been 12 years ago, 15 years ago, that gold went up to like 1,900. So I called up my trading coach, Akmila, and I put some puts on gold, and it really did well. Is there a chance there being another opportunity of that just to speculate? Not to sell your, physical gold and silver, but short or put some puts on some gold?
Well, there's always a lot of volatility in the price of gold and silver. So, yeah, I mean, the timing of puts are tricky. You have to catch. It's like catching a falling knife. It's a little difficult. But if you believe that there could be a significant pullback in the price of gold, and let's say you expect it might go back to 2,100 or 2,000, sure, you can make a ton of money if you're buying it now and putting that put position out. I don't know that we're going to see any real significant pullback in gold. It's a little difficult to expect that. I would have thought that a little bit more likely in the last couple of weeks with the dollar climbing as much as it has around the world. We're just surpassing every other world currency by a significant margin. In fact, other currencies are already reducing their rates. So the U.S. dollar looks very good. If you think about it in terms of the way the world sees the dollar, because our Federal Reserve has not lowered interest rates, what we are paying on U.S. debt instruments is higher than what other countries are offering, which makes it very attractive for investors to load up on U.S. dollar investments because they're getting paid a higher interest rate. So with the dollar getting stronger, that would be the point at which you would expect to see a pullback in gold. It hasn't happened. So I would think there's a little more risk in taking a put position against gold at this time. But again, because it is a worldwide market and everything interferes with its price on a day-to-day basis, there's always going to be at some point, a point at which it might pull back. So you'd have to have a put position. You'd have to have it timed right. You'd have to know how long to hold it. And again, if it goes against you, make sure you limit your downside risk just in case you don't get caught in it.
Yeah, that's why they have stop loss in there.
Yeah.
I mean, that's what we do. Thanks for your call, Eric. Appreciate it. I mean, it was a decent question, but see,
Absolutely.
again, but you got to play the markets in order to take advantage of that. And see, people are they still getting squeamish about the markets, Fred? I got completely out of them.
Well, a lot of people are because the earnings reports that are coming out have been pretty haphazard. You're having some companies show terrific responses to their last quarter and others not. And unfortunately, what's happening now is that everybody is sort of geared into this so tightly that not only does the company have to perform in the quarter, but they have to say that the next quarter expectations are going to be higher than where they currently are. I've seen a number of companies' stock price get pummeled, even though they came out with earnings that were better than the previous quarters, because what they said in the end was, yes, we did really well this quarter, but expectations for the next quarter are not really great. And that's all anybody wanted to hear. And the stock gets killed in the next day in the market. So you have a company, you do great, you perform better than the last quarter, you show higher profits to your stockholders, not good enough. We're still going to see the stock get hit. So
yeah, I understand. Well, see, then we got some woke situations going on here too. Like, you have Planet Fitness. They took a nosedive when they started letting all these men into women's restrooms, locker rooms. You've got, other companies that said, oh, yeah, we're going to start hiring, pro-Hamas, all you students out there that are protesting against Israel. We got a job for you. And then all of a sudden, literally, 92% nosedive on some of this stuff. I mean, it's pretty crazy out there right now for people that's a chance. That's a big risk.
It sure is. I mean, the last thing you want to get your company involved in is some political nonsense. I mean, you've got enough trouble as a company owner to just sustain growth and, show good profits and run your company smoothly and effectively and efficiently and show consistent gains. Now, if you're going to stick your neck out and take a position, well, we've seen a number of companies that's blown up on and it has gone against them. So I don't know why a company would want to take that risk, to be honest with you. I just keep my mouth shut and move on.
Yeah, I would too. All right, Brady, do you have a question for Fred?
Yeah, good morning, gentlemen. I heard something in the works that Saudi Arabia is possibly going to join the BRICS and SWIFT payment system. And what they were saying, the analysts, overnight they said the price of silver is probably going to go all the way up to $70. Have you heard anything about that?
Thanks for your question, Brady. Go ahead, Fred. What have you heard?
Yes, I've heard a lot about this sort of thing, and there's a tremendous amount of speculation. If this happens, then we get this result. In all my years, I find the speculation tends to not really quite hold up to the hype. So I don't bank on any of these things occurring to make a recommendation. what I kind of like to focus on is the relative falling in value of the US dollar and look at it from a point of view of saying, yes, these other events may occur. These are the exogenous events that could have a huge impact on the market price. But I think, like the speculator who wants to consistently think about shorting the price of gold, you're in a totally different world and a totally different mental thought than accumulating physical gold and silver, for the purpose of wealth protection and long-term inflation proofness. So I don't try to really make recommendations based upon those possibilities, but we are definitely hearing a lot coming from BRICS and an awful lot of problems that are going to exacerbate the potential for a price jump in the silver market. Again, I just caution people against investing, because a lot of times if you do it based upon those things only, and then let's say that event doesn't happen, or to the extent you thought it would, you get a disappointed investor. My opinion is accumulate physical silver. Anytime the price looks conducive, add to your stash pile. It won't hurt you to own physical silver. I don't care what happens to its price over the next year or two. I've been doing this long enough to know, since we were looking at silver at $3.50 an ounce, and we were talking about when would it finally get to $4 or $5. Here we are today at $27.50, and we're talking about, okay, when's it going to cross 30 and 40 and 50? So yeah, there's huge potential for any of these events to cause a spike. But again, I just caution people about investing with those things only in mind.
Now, and the thing is too, Fred, I'm looking at this thing that people do this instead of looking at the logistics of it. And just like you said, not overbuying, but buying fractionally and just continuing to accumulate. That would be the smart move, not doing any of this out of fear that our entire economy is going to collapse overnight. And you actually work with people and set them up on a regular program to acquire, right?
I do. I've been helping people do that for a long, long time, and it has really worked quite well. People just try to add up periodically as they can. My tagline has always been, be an accumulator, not a speculator. So the speculator is like the guy, taking a long shot on a gambling bet. If it hits, it's going to be huge, but the odds are against you. So, I like accumulation more than speculation. But again, it's so exciting when there are so many things that could potentially make silver jump at any moment. I never look at anything anymore without saying, hey, this is our opportunity, and who knows what we'll be looking at in the next year or two. So if you have the chance to take physical possession of some silver, do yourself a favor and do so, especially now with the premiums being so low.
So now what do you do as far as, I've always been a big fan of the pre-65 Roosevelt dimes, the Franklin halves. Yeah, the Mercury dimes. That's what I'm talking about. The Franklin halves. You want to use, you don't really deal in that far back numismatic stuff. Like when they first started, producing some of these earlier silver coins from back in the, the Morgans, the, peace dollars, stuff like that.
We actually deal with stuff going back as early as the 1790s. I've
Wow.
done a lot of rare coins. What happens there is you move away from bulk accumulation to an individual coin. So, for example, the stuff you're talking about, like a Franklin half or just a circulated Roosevelt dime, or even a Mercury dime, those are still available for these low premiums, and you can buy them in bulk. Now, once you get to early series, what happens is the coins become very valuable individually. And we've dealt with a lot of coins that go back before 1800, and there are some silver dollars from that period that are worth millions individually, each one of them. But they're impossible to find. If you can find one every few years, you're lucky. And the competition to own them is fierce. Every time an auction shows up and one of these rarer coins becomes available, there are people in an auction room fighting over each other to try to get access to these things. So there are really some tremendously interesting individual coins that date back from the Civil War era and earlier. But again, it's a slightly different part of the market. I think it's a viable part of the market. For those that have a little more money, you might be looking at $5,000, $15,000, $20,000 per coin. But these are coins that do appreciate very well over the long term. And for those that are spending several $100,000, it actually makes sense to have at least a couple of these very rarer coins to comprise a portion of your wealth. So it's a slightly different way of approaching the market, and it works extremely well. But yes, there's some great coins that are available, mostly one at a time, that date earlier than the types we've been talking about in the past.
Right, but see, now you still have the same gardens, but I mean, you've literally liquidated everything you did in the spring sale.
We did. We bought a bunch of coins at one point, put them together in packages that we assembled. I had to hand select a group of coins to get the ones that we wanted, and then we had to have them all certified and graded. We got that done. We had a pile of coins, so to speak, available, and then we promoted this particular spring special. It took about a week, maybe 10 days, and then we blew through what we had in inventory. So,
wow.
that is unfortunately now sold out. But I do have a consistent inventory base because I constantly have customers calling every day and they want to put more money into the market. So we're always adding to our inventory. Occasionally I can package things together with some sort of special and make it a little bit more conducive, just to make it a little more fun and a little more interesting. But we have inventory on a regular floating basis to always be able to help investors.
Well, see, and the thing is, too, is the focus should be pre-65 junk silver if you're going to buy that. Quarters, dimes, halves is what I like to spend mine in. I mean, that's pretty sound, but you're basically, when you deal with Fred, it's $1,000 a crack. Anybody that's got that kind of money in the bank, you literally, knowing what's going on with the commercial shoe dropping the way it is, needs to get a hold of Fred and have this discussion, right?
Absolutely. And then, we jump up to the silver dollars, and there, if you start looking at them in mint condition, you're looking at maybe $100 to $250 a coin. So there's an array of older coins in mint grade that are available as well. Again, this helps sort of eliminate some of the bulk. For those that are spending $100,000 to $200,000, if you're buying just circulated dimes or quarters, $100,000 worth of silver is going to be a couple hundred pounds. I mean, it's a lot. It's bulky. That's not necessarily a bad thing. But again, if you wanted to save a little space, you can look at some mint condition silver dollars. And we do have an array of those available as well.
There you have it. uscoincapital.com. And that's OL Capital, right? Not AL. OL.
Like the building.
Yeah, like the building. And, if you've got questions, that's why Fred's got the toll-free number, 800-878-2646. Fred and his staff are standing by to help you out. And we appreciate you, Fred. Every time you come on, we always learn something new.
Always happy to be with you.
Thank you, Fred. I appreciate that. God bless you for the work you're doing, helping people stay afloat. In the meantime, folks, we're out of time for today. We will be back tomorrow with the Thursday edition. Hopefully some better news than what we got today. Oh, my goodness. I mean, I can't believe time flies the way it is. In the meantime, do something nice for somebody. Yeah. God bless you, and God bless the United States of America.